Hi there, traders. This is Brad Gibble with the FX Market Insight for Friday, the 30th of August. All right, a new month almost upon us, but just as we cruise into the start of the Asian session here, let's just see if we can pick the eyes out of this. Now, just with the ongoing Trump affair, we are starting to see the US dollar just poking its head up, dollar yen, the dollar index, and dollar Swiss, and that's pushing euro down as well. So what we're starting to see is the geopolitical impact slowly unwinding, and it's impacting different currency pairs differently depending on where they are. Obviously, the two pairs down the bottom here, Aussie and Kiwi, a little bit conflicted. Now, the Kiwi yesterday, the business numbers came out weaker than expected. A nice, real short-term trade to the downside. But this whole sort of technical setup and everything else is in conflict with the US-China situation, especially when there's now optimism about a deal getting done, right? If there is a deal done between the US and China, you're going to see, in particular, the Aussie and the Kiwi go up, which is against their current fundamental picture, right? So that's going to get a little bit tricky to work out. Sterling, well, you know what? Brexit's still the main catalyst here, so it's pretty hard to work out what's going on. Boris has dissolved Parliament for the summer break. To me, I think the UK citizens are becoming desensitised, and I think this is going to be a bit of a non-affair, and that could slowly go up as well. But and that's pretty much it. There's no real the current moves are very fickle, right? When you look at the sort of longer-term aspect of the markets, there isn't any solid footing, and that's a bit of a worry. But what that means is, to me, right, there's short-term trading opportunities at best, and that's it. Don't fall in love with the positions. If you see an opportunity, especially from the upcoming events, and they fit in with the current short-term trend of that currency pair, yep, jump in, but you're probably taking the position, closing the position out, 2 to 4, 5 hours later, because you're not going to see a flow-on effect because we don't have those overall trends. Now, Aussie building approvals, not a big deal. CPI flash estimate, now that does come into play, and with euro starting to tweak to the downside, it could be definitely something worth looking at. The Canadian GDP numbers, now the CAD is just whipping about in a big range. The market is starting to get very excited about a potential rate cut in Canada, so have a look at that as well. And then you've got a couple of US dollar numbers to get your teeth into. The PCE price index, a good inflation number the Fed looks at. Well worth having a look at. I don't know if it's going to be enough to really get things moving unless there's significant variance, which is a stretch, but you never know. All right, now let's just have a look at the... now, this is the confusing thing. For those traders who are looking at the market and new to trading, you've got to piece together the rubbish that's out there. Now, dollar lifted by US trade optimism. You wind that back a couple of days ago and it's all doom and gloom. Trade wars, global growth, everything's going to fall off the face of the earth. Now it's all a bit of optimism. US economy slowing, but consumers limiting. Canada's banks brace for tougher times as Goldilocks era winds down. There's one of the old banks I used to work for, Toronto Dominion. And that's pretty much it. So there's not a hell of a lot going on. It's just the to and froing of the geopolitical crap, which is causing the short-term noise. What we're looking for is bigger trading opportunities. Now, if we have a look at the charts here, the Aussie, well, I've just weighted it out a little bit. You can see it's trading in a bit of a range, sort of 68 to just under 67. It's sort of hanging around that range. Kiwi has got more of an inclined downward trend at the moment. It's well worth keeping an eye on. And with that pressure off, even from the media between the US and China, we are starting to see a wind back out of those trades that were put on Monday when Trump was tweeting he's going to blast China with loads more tariffs. Here's the euro. It's now trading sort of sideways. We've got a couple of sort of short-term trend lines. It's trying to work through. It hasn't got enough momentum to move to the downside yet. That's why I'm thinking today's CPI flash estimate may come into play if it's weak. Otherwise, you know what? This thing's probably just going to drift back into the range, back towards 111 as we approach the weekend. And I've left the trend lines here also on sterling just to show you, look, this thing's just trading sideways through trend lines. It's got no real respect for anything at the moment. And dollar CAD, well, sideways it is. Oil's back to 56 bucks. Favours a move to the downside, which to me, stronger GDP numbers looks like a good opportunity. And that's where we are on the major pairs. So really, if you were tidying up your charts, I'd be deleting that trend line, probably deleting this one here as well. I just want to focus on what's relevant to me right now. So when you are looking at your charts, wind them out, see where your support and resistance lines are, and then piece together the upcoming data. So this is where you sort of pieced it all together. Now, coming back to the MyFX Trading Hub, as I said, there's not a lot of momentum across the board. The Kiwi is still the standout to me on the whole trading front. So when you are looking at the upcoming data, this is going to sound weird for some traders, but if we get strong US numbers here, well, the best pair to be looking at is the Kiwi. Strong US numbers means Kiwi down, goes with the whole trend. Trend your friend. That possibly is still the best trading opportunity. CPI flash estimate, I tell you what, weak numbers here, we can start to see it rattle the Euro's chain, and it is already starting to point down. We just need another sort of 30 or 40 points, and it'll start breaking through those daily trend lines, and that's when we're going to start to get some momentum in Euro. All right, guys, that's it from me. Have a good trade day. And if I don't speak to you, have a good weekend. Cheerio.